In this video, traders, we're going to look at 5 things that remove the noise and simplify your trading. Stay tuned. Hey traders, a very warm welcome to you. Okay, so trading, we have so much information out there. We now in a situation we've gone from zero information pretty much when it was very hard to start trading. All institutional guys had all the news flow, all the information, and there's actually quotes from the big guys who said, hey, the thirst for information and knowledge was what's made you successful, to now where we are in this day and age where we have an abundance of information. We can get any information we want, and it's become our job to filter out whether that's entertainment, whether that's trading. So this is what we're going to do. We're going to simplify our trading with 5 simple steps. All right, let's go. Number 1 is no news flow. So while we're on that information idea, turn off that TV. You don't want Bloomberg on, you don't want Reuters on, you don't want any other CNBC, any other financial news on. It's of no use to you. Hey, listen, can you put it on if something's happening? Sure. If you want to have a look at it from time to time, no reason not to, but you don't need to be being bombarded with news flow all the time. Don't forget, their job as media channels is to make stuff look good. And if the market's sitting there doing nothing, they're going to say, oh, let's bring someone on to say why the FTSE is going to fall 1,000 points tomorrow. Let's bring someone on to explain why this company is going to go up tenfold. They're trying to create interest because obviously they're trying to sell media space, advertising space. So we don't need it. Get rid of it. It's the same with the streaming news flow. By all means, have this kind of stuff, but just dip into it when you feel you need it. The last thing you need is this bombardment of information. It doesn't, well, rarely, it's unlikely, should I say, going to help you make a better trading decision, and it's just going to add to the noise and cognitive load that your brain's trying to process. Okay, number 2, limit your watch list. If you're trading stocks, prune it right down. You don't probably need to be looking at a universe of 100 stocks. Same if you're day trading or swing trading, whatever. Just reduce that load on you. You don't need that many. There's enough opportunities or if they don't think there's enough opportunities, pick your 5 best stocks, your 5 best markets, indices, currency pairs, whatever it is, and just stick to those. You know, you might miss stuff, but honestly, you'll probably find you're way more focused so that you can get onto these opportunities when they arise with these 5. You'll trade less, you'll be more alert, you'll be more prepared, you'll be more focused, and ultimately you'll have better success with it. So clear out that watch list. Some people are watching hundreds of stocks. You can't watch those effectively. By all means, have them in a watch list that are then presented to you with an additional filter that say, hey, these are moving aggressively today, or these are hitting levels today down to my 5. But what you don't want to be doing is having reams and reams of stuff you're watching just for a setup, because you're going to end up flicking from one to another. Is that a better setup? Is this a better setup? You want to reduce the noise, not increase it. Okay, guys, number 3, limiting your chart data. Chart packages are great at the moment. We can have unlimited amount of stuff. We can have a 1-minute chart, 1-second chart, 1 hour, 1 week. You don't need all of it. You need to pick a couple of time frames or a couple of bits of data. Do you really need to have an hourly as well as a 15? Probably not. Do you really need to have that daily when you've got a 4 hourly in your day trading? Probably not. Prune it right down, reduce the amount of charts. Some of the best traders I know trade from 2 charts, a 5-minute and a 15-minute. They know what they are on a daily. They don't need to look. They're day trading, they're scalping futures. They don't need to. If you're swing trading, do you need the 1-minute? No, you do not. Do you need a 3-minute? No, you don't. You need a daily chart. Maybe you need one more time frame, like a 4 hourly or an hourly, to fine tune the entry. The point is, you don't need that. You don't need all the data in there. Reduce the load, reduce the amount of stuff on your screen. Less is more. And if you can get away with doing it from one chart, maybe do your analysis on the other time frame charts and just have your one chart to make your decision. That might even be the way to go. It's all about that noise reduction, guys, reducing that clutter in your mind. Okay. Number 4, along the same kind of line of this, limit your indicators. It's tempting to have this one, that one, all those indicators up there. Fine, I know that they can be valuable, but you don't need that many. Many of them are doing exactly the same thing. Oscillators are all showing you overbought or oversold. Trend-based indicators are all showing you momentum or whatever it may be. Moving average-based indicators, they're all based around the same formula. Ultimately, you can prune it down into a couple of indicators, or you go completely naked. You have no indicators and you just bolt the indicators in when you're ready to trade. So you can assess the chart, price action, supply, demand. When you're ready to pull the trigger, you can put your indicators in and look if they are part of your trigger process or trade process. But less is more with indicators. What you don't want is to have reams and reams of indicators that you can't even see what's going on with price. They're all derived from price, volume, time, or other parameters anyway. So price action is best if you can do it, or limit the amount of indicators if you want to have some indicators on. I'm not against them, but just be careful that you don't have too many. Number 5, trade with the underlying trend. Slightly different thing here, but it makes your life easier. We want to simplify trading and we want to remove the noise. If you say to yourself, hey, you know what? We're in a bull market. I'm a day trader. I'm only going to look for longs. You'll make your life a lot easier. Sure, you're going to miss some fantastic short opportunities. Sure, you're going to leave some money on the table if you look at it like that. But I bet your performance will increase because you're aligned with a trend and you're reducing the amount of trades you're taking. And if you're only looking for longs, it means you're not confusing yourself. How many times has price been pushing lower and lower and you think this is a really weak chart, I'm going to hit it short, and maybe it's a good short, but then you've also in the back of your mind thought, you know what, it's probably going to bottom out at some point because we're on day 3 of this, blah, blah, in a bull market, it could be a buy. And then you've got that conflict in your mind. You see short-term momentum to the sell side, you know that there's medium-term momentum to the buy side. If you just stick to the trend that's underlying, i.e. the bull trend, the bullish trend, you can wait for that to resume and then you're looking and focusing on the next long rather than trying to make money on the short and then the long. You're waiting, okay, well, I want to find the best sweet spot for my long trade because I'm aligned myself with the trend. Or the short side, if it's a bear market or if you're in a downtrend or whatever it may be. And also, by the way, guys, trend could be, it could be a year, or it could be a week or a quarter or a month, depending on what time frame you're trading. The point is with every one of these, it's about reducing the amount of noise. It's about bringing the focus into one specific thing because that's when you can perform at your peak as a trader. All right, guys, take care. Keep your risk management, whatever you do. Decrease the clutter, simplify your trading, and you'll find that you make good leaps and progression in your trading career. Take care. Bye-bye.